Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Day, the technical stock market analysis show, where we look at the charts and then try to understand what happened in the market during the day and plan for a better trade for the next day. It's April 12th, Friday, tomorrow, 2024. So we have a holiday today. The last trading day yesterday, we made new all-time highs once again on both indices, and Banknifty in fact reached the 49k, although it close above that. Let's try to understand more. We'll come back here after we look at the technical charts. So here we go, and we have the candlestick. Yes, it's kind of a hammer, small body, inside bar. Inside bar is it because body is almost inside the previous candle, and so therefore there could be indicative of some consolidation. The fact that we have a kind of hammer on the top of a rally could be an indication of a reversal as well if the price confirms that below the low of the candle. Nifty has a clear hammer with an all-time after an all-time highs hit. The hammer in the top of a rally could indicate something reversal if it's confirmed price moving below the candle's low. And Nifty has been making all-time highs since last 6 days, and Nifty has been making it consecutively for the last 3 days. Price is within a trend line channel, a lot of space left to the top of that. Therefore, if you look at the support resistance levels, 22,775 could find resistance, and 22,800 close by as well. Then 22,900 and then 23,000 could be where the resistance will come in for the next day. Downside, 22,500 could find some support. That's where the breakout of the last 3 days happened. It could be support. 23,360, the 20 expression moving average zone could be next support, and then 22,000 is a big rounding number, as well as 50 expression moving average supports as well. 21,862 has got the Fibonacci retracement levels supports, and then 21,550 would have the 100 expression moving average supports that can come in there. Only on the Banknifty, the first resistance will be 49k obviously, then 50k. Any hundreds in between would obviously have some resistances, and 48,500 could be a major resistance on the journey upwards. Downside 48,500 will discern where the breakout happens, so there could be some supports that can be there. And then further down, there was some consolidation breakout that happened 5 days before. It's at 48,200 zones. That could be next support, and then we have a gap at 47,700 and 47,600. That's got 20 expression moving average. So 47,600 to 700 will be a good support downside. And then 47,000 big rounding order has got a 50 expression moving average as well. That will be next support. And then 46,500, 100 expression moving average support downside. That's the support resistance that we can see. Just go back to a quick wrap up. We have 3 consecutive days of highs on Nifty with a 0.5% gain yesterday. 111 points up, with 35% of rally and 4.5% retracement so far, above the 20 expression moving average, closing about 22,750. As a green hammer inside bar, probably some consolidation and a hammer causing some worry on some retracement possibility as well. Nifty also new all-time highs, 6 consecutive days highs, and positive close of 0.5% about 56 points to be precise, and a small body hammer again at the top of the rally, about 20 expression moving average and 27% rally, and closing just below the 49,000. Intraday was a gap up, and then try to move up and hit the all-time highs, and finally closing green. Levels we already seen. I'm skipping that. So what was in favor of the bulls? Nifty and Banknifty making a record highs, and then closing about 22,750 and 48,987. RSI momentum, price action, 20 expression moving average being conquered, ADX in positive zones. These are all factors in favor of the bulls. Bollinger Bands, upside expansion indicate, and actually it's Bollinger Bands working on the bands concept in the Banknifty. It's extremely bullish that way also. So potential upwards can be predicted from the Bollinger Band daily charts definitely. Industrial sectors are closed green except for the auto and the pharma, but if you see the momentum RSI, you can see they're all bullish or sideways. And of that, none of them in bear zones. If you look at the industrial sector indices, all of them, or the major of them. Heavyweight stocks that contribute maximum to index, if you see, they're all green today in the sense the last trading day. And if you see the momentum of that, they're all bullish or sideways. Only one Nifty is in the here also started more to the sideways, but otherwise they're all green, bullish. So that's all positive factors. India, which is cooled down, crashed 2.2% again, and it's 11.1. It's fallen back to the low volatility regime, which is what happens when the price moves up in the market. So that also it's in favor of the bulls, or it's in favor of the bears. And inside that consolidation at a hammer on the top, giving some potential for reversal. Other only troubles from the chart patterns. The thing is, US markets are red. The momentum has dipped, and then some small back gap down of 1% of move has happened. This is because the US markets have been rallying just like ours. Some retracements could come in, and from other market retraces, there is a possibility that it can reflect in our markets as well. So keep a close watch on the US indices like Nasdaq, Dow Jones, and S&P 500. The dollar is showing green at over 5.24, is about 8 spiking up, and the rupee is all flat, being controlled by the central banks at 83 above and remains weak. Another blow is the crude oil is at the top and then showing green and spike up and trying to break out of the top of the trend line channel with bullish momentum. 86.53, trouble for an oil importing company like ours. Gold has been showing some red, but remember it had made all-time high last week, and then it's breaking out, and so we have to be cautious. Once again, even though some red has come in now, the worry is that is it equity money getting taken away into a safe haven like gold for some unknown reasons, for reasons not known to many of the retailers. Gold moving up is good as a hedge instrument, but gold and equity has this relationship which brings in worry. Fyers for net buyers is positive actually, but still goes in favor of the bears because Fyers had not been consistent buyers since a long time with the cash. Probably they may come in favor of the bulls, and the money and market will break out really when they come in. But for that, we'll have to wait for a rate cut in the fall of some events like that. As of now, they come in and buy something and then sells double of that in the next few days. That's why it's come in these periods. But the fact that the price of about nearly 3,000 crores in the market in the last day is actually mostly for that day alone. Right? But institutional participation lacking still puts it in favor of the bears. Now, the volatility that market is at new highs, showing strength and day after day, and the banking index also which had been lagging behind, has also joined with crack down of the 49k is good, but we have big rounding numbers of 23,000 on the Nifty and probably 24,000 or so on the Nifty, and 50,000 big rounding numbers, another 1,000 points a day. So there are big rounding numbers, and then it may wait for some events like positive reversals or Fed rate cuts or election outcomes and things like that before that really happens. The market may be waiting for something, some exit polls or something like that. So that's where it may be. Until then, it may decide to trace a little bit or consolidate within a range, and all that can happen. So have that stop loss if you're positive long market. So reversals could come in. You have to be careful of that. So for investors, that's IPO long quality stocks, or get RiskReward rental incomes after buying those stocks using the option setups. Check out the playlist on that. For traders, we are option buyers. We have to wait for directional thing to really come in, but the candlesticks are falling into selling pressure because of the fact that big rounding number is very close by all-time high levels. These markets also consolidating in several factors. So we just have to wait before we get that one big trade with option buying. But option sellers will have to go for OTM, call and put on both sides for OTMs or based on your analysis range. But otherwise, the IV to RV spread for option sellers is not that great. The spread difference basically is not that great for the option sellers. And also the IV percentile also cooled off to 30 or something from the 89, 90 levels. Yep, so that's the situation. So have types of reversals, potential reversals, potential breakouts also there. Otherwise, the momentum bullishness, trend bullishness, and the price action wise, everything, what stands out is bullishness for sure. Directional breakouts will happen, but it may not happen like we wish for a big breakout. Right? You have to wait forever for that. So play it safe is what we can do. Right? Look at the support resistance levels, they are probabilities and not confirmations. It is probabilities from technical analysis. Manage your risk, all they can do that. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.